Hey everyone! Today we'll be looking at the petty cash fund. Before diving into how the petty cash fund works, let's first take a look at what it is. The petty cash fund is an amount of cash that is kept on hand and is used to pay for minor expenditures. For example, it can be used to pay for office supplies or postage of small mailings. So now we understand what the petty cash fund is, let's take a look at the 3 steps involved. First, establishing the fund. Second, making payments from the fund. And third, replenishing the fund. Okay, now let's look at step 1 in more depth. To establish a fund, a business will write a check for the amount of the fund, cash the check, and then place that cash under the care of an employee. To illustrate this, let's take a look at Tim's toy store. On the 1st of March, Tim decides to cash a $50 check to establish a fund and gives the cash to his employee. On this date, Tim would record the following journal entry. See how there is no change in assets? Okay, now moving on to step 2. After the fund is established, cash can be used to pay for any qualifying expenditures. There are 2 ways of making payments. Cash can either be taken directly from the fund, or employees can be reimbursed from the fund after they use their own money. Either way, the custodian should be collecting receipts so they can keep track of how much cash is being used. It is important to note that as payments are made, no journal entries are made. Okay, now moving on to step 3. Replenishing the fund. Before replenishing the fund, the remaining cash in the fund is counted, and then the business will write a check for the amount which will return the fund to its original balance. The business will also record all of its expenses using the receipts that have been saved. To illustrate, let's take another look at Tim's toy store. On the 31st of March, Tim examines his petty cash fund and prepares a petty cash fund replenishment report. Here we can see Tim has $5 left in his fund as he has spent $20 on office supplies and $25 on postage. This report shows Tim needs $45 to replenish his fund and his receipts total $45. Tim then creates the following journal entry. However, sometimes a business may find they have a difference between their amount of receipts and their amount of cash needed to replenish the fund. This difference is charged to an account called cash over and short, which can either have a debit or credit balance. This difference can occur if the custodian doesn't collect all the receipts or gives incorrect change. To illustrate, let's imagine that instead of Tim having $5 left over, he has $2. This would be shown like this in the replenishment report. This report shows that $48 would be needed to replenish the fund, but there is only $45 of receipts. The $3 difference would then be charged to the cash over and short account, which would be debited in the journal entry. And that is all you need to know for the petty cash fund. Thanks for watching.